higher than you've ever been. You've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day. Let's get right into the charts and not waste your time a moment more, shall we? Bada bing, bada boom, here we go. Well, these are our diagonal fib levels holding true. We're expecting this to break down off the 706 down to the 605. Instead, we broke up and meandered around above this area. When you consolidate, there's only one thing you can expect to do. This is called the CER play, alright? So you have C, consolidation, E, expansion, R, retracement. So you're looking for a CER play if you are bullish. If not, then you might come back into this. When you consolidate, what it's doing is creating pools of liquidity. What is liquidity? Well, liquidity is in the form of stop losses. And in the case of longs, they have to sell at a loss. So this becomes sell side liquidity down below here. And up above, they create buy side liquidity where the shorts have to cover their positions by buying. So you have the buy side liquidity triggered right here, and we're coming back to this point where we could either bounce or drop down into the sell side liquidity pool. I suspect, since they haven't tapped the longs and it being false move Monday, that we could come back into these ideas down below and trigger all the long sell side liquidity before going higher. just off of a narrative of False Move Monday. All the longs drawn their Mario flags about now, thinking that they got it all figured it out. And then Mario takes the dump to the downside, inverse Bart Simpson down, and then they get back up to that, trigger all their stops on both sides. Don't have to pay the shorts, don't have to pay the longs. Win-win for the market maker. That's just an idea. Learn about buy side and sell side liquidity at your leisure. Consolidation leads in one place, which is expansion, and then the retrace. So the retrace would be something like you have to do a proper fib level, and rather than draw a Mario flag, you'd be looking for a retrace into the 618 or the 0.65, the golden pocket region, for that local bounce. So if you were looking to bounce out of here, you'd be looking for that down here. Now, let's go, before we get ahead of ourselves, let's go into the liquidation levels, shall we? What is the heat map? Well, that is when people leave their liquidity in the charts to be burnt to a crisp by the market maker for not using a stop loss, and then they repossess their money and get that burnt to a crisp off of that idea. So what we were seeing earlier today, we put out the point when we got to the top here, and we saw that that was being rejected off of a daily adaptive moving average line. You got a shoulder ahead, potential shoulder forming if it fatigues out to go down to here, but then they might fake out and then shoot up to the 29.4 as we just put out. So we're still looking for those long stops to be triggered in some way, shape, or form, which they were not. They held that 618 for the bounce to the upside. So let's go ahead and close that out real quick and look at the liquidation levels. How y'all doing out there? All the sound doing well, I hope. Let's see. Dropping gems. All right, nice. So we're going right into this right here. So you have, as they were opening here, these giant bubbles were opening up below. 168 million, 168 million, 168 million, lest we forget our character lost in the time frame, who was 148 million down below here at a current loss from their open. So this looks like a thick bunch of noodles to slurp up. There's a lot of broth up above, suggesting that it comes for these 100x characters at 168 million at 28 even and 27.74, and possibly triggering the stops below. So let's go in a little bit more of the minutia here. Why were we not putting out upside plays here? Well, you're seeing the thicker liquidity down on the bottom of the price here. You got 120 million, 120 million up above, only 54 million, 47 million, 14 million, 168 million. So the shorts are scared in a sense. They're losing the tug of war, or they won the tug of war only because they had stacked up a bunch of weak players here, but a bunch of strong longs entered here, which become dead weights to their decision, which end up becoming targets to lose the tug of war. Once they knock out some of the shorts, then the longs get a chance to get knocked out. So you're seeing very few shorts pools open up above and very few long pools open as it's even Steven on this consolidation here. But the interesting point is here where these guys opened with a fervor, so they could be coming back to eat these guys up as they like to do. And if you just juxtapose those noodle lengths too on the right, we call them noodles because these straight lines to the right hand side will show you the length of the noodle, which shows you how much of a slurp you can get from that pool. So there's nothing stopping them from slurping up all these noodles all the way down to 27.42 or below. That would be mighty nice if it did that. It always has a stop here and there to scare out some people. We are seeing that kind of pause in the interim. So we're going to go to really quickly just the S&P, because we were seeing the S&P gap down, and that could be the pause that was coming. So we were putting out that idea of, and it filled out our projection nicely of that coming down to that arrow to the T almost from that projection we put out the other time on Thursday, was it? Friday? I don't remember. but that's in the past. It's completed its projection in my mind. It could keep going lower. They recover the gap and continue back down. Generally, it likes to come up, recover at least 50% of the gap that it created here. So that would put it in line with that and then continue lower if it was going to do that. Getting ahead of myself, so let's go to the higher time frames on the heat map, shall we? Bada bing, bada boom. Here we go. So we're seeing the juiciness below while we wait for that to load. It's just like you can compare the size of the bubbles, you can compare the length of the noodles to the right and see the space between the noodles, the broth as I call it. There's more broth up above, suggesting they come into these pools. They've made their fingerprints known in terms of their interest in my mind. So it could come into that, and we're just seeing a slight bounce due to the just repossessing of those pools there. We'll see. I mean, I potentially want it to go down too. I'm still in my short, so I'm actually at a loss currently. Just to let you know, I'm down $100. Whoop-de-doo. I was up 100 earlier and didn't cash out, but I have conviction behind my thoughts to leave it open due to these bubbles here, so I'm not just leaving it open for no reason. We'll see how it plays out if it gets to this guy at 28.04 and at my break-even point, and then we'll reassess from there. So yeah, that's what we're seeing right now, and we will see what is going on. Monthly time frame. Okay, so the monthly time frame has the immediate 29.4 region as our point of interest. That is going to be unchanged as we go to the higher time frames. What we're looking for is a hit to the sell side liquidity down below to at least stop out some of the 100x, because previously I was seeing a lot of 100x down below and we shot up, giving me the impression that we are still attempting to go lower, but just stopping out the shorts, 100x shorts, before we go knock out that sell side liquidity. So how far into this do we want to go is the question. 27.5-ish is what I'm seeing, just in terms of like getting about 20 billion out of the game and then going perhaps back up for the end of False Move Monday, getting everyone slightly bearish in tone before actually shooting it up. They did that before with the Silicon Valley Bank. It was talking about foreclosure of that, everyone got ultra bearish, and then we shot up here, giving these happy campers at 19k a good entry. So we are at that 29k region. We on the 3-month time frame, you see these pools above definitely looking juicier than the pools below, although these runs on the stops, this 20 billion or so down here that could be knocked out before making this run up to 29k would be a nice thing, or at least going to the 618 of this impulse, which would be a discount region for going long. Let's go see. Yeah, let's go see this on the higher time frame of the 6-month. I don't flop and grope, so I'll just stay in the trade until it meets my expectation, because generally it does. So we'll see what that goes with this. So here's the pool we're talking about. There's 34 billion at 27 even. There's 12 billion at 27.3, 10 billion 27.6, so that's 23 billion right there. 3 billion at 27.9, so that's 26 billion right just below us. and then just above you have 10 billion at 28.8. If we just go in the immediate, so you have 10 billion at 28.8 and 3 billion at 27.9. 31 billion 29.1, 10 billion 20. It would make sense to come clear out some of this 34 billion at 27. For me personally, it's getting hot down here at 27k. Maybe they give the longs or the shorts a little bit of spiciness to their position and then take it back. As of you're looking below here, you also see these pools sub 20k. You got a lot of thickness below here to think about. I don't even know what the total on that would be, but probably $500 billion. Let's see, and leading to the 22.5 region, we talked about that on a lower time frame. A lot of pools there, 300 billion by the looks of it, and you got some more at 25 for a potential bounce region if we head in that direction. I'm in the mind of coming back to that 29.4 at $82 billion now, and it was previously 79, so they brought 4 billion more into the charts. So are we going to see the bounce up to there from today on False Move Monday, or Tuesday, Wednesday's move for the week? That is the question. Is it going to continue from here or go down to continue at a later date? Let's go to that yearly time frame. Once again, we were talking about how surprising these pools above all the way up to the 34.8 region are starting to cake up quite nicely. What do I mean by cake up? Well, the icing on the cake is starting to thicken. So we have a lot of icing up here that is paving a path to 34.8, which is crazy to say because there was previously nothing up there. See, 0. And now at 3,800, you got 70 billion. So in just so little time as March 9th to now, you've gotten 70 billion up here at 30,800. So that's quite a lot of liquidity. That's a hop, skip, and a jump away, paving the way to 34.4, which is interesting to note. Just below, you're seeing about the same level in terms of heat signatures, so it looks like it could go either way. It doesn't necessarily need to retrace into this. It could go higher. So that's interesting on the yearly time frame. The 34.8 region is not out of the question on the higher time frame. So that's a interesting bullish scenario that may occur. If we go to that 3 month and below, that's when you start to see the even Steven nature of it possibly going to eat some of that liquidity down below after hitting 29.4 and releasing some of that juiciness of that 80 billion. It could come down into these regions and start to scare out some of the longs before continuing higher. Particularly the campers at 19.4 and below, there's a lot of liquidity down there. So how do they get those guys to close their trades a little bit, because you do have about 300 billion, if I recall correctly, down below here. So that is that. Let's go back to the monthly time frame, leave that open, and start going to the fibs, shall we? We're gonna make the stream short but sweet today, just to let you guys go enjoy yourselves afterwards. So you got these pools down below here. This is what I'm looking at here on the interim, because you got a few more to go all the way up to 28.8. Just not as much up here as there is just a hop, skip, and a jump down here for me personally. So let's go see how it's doing in the in terms of the recovery here. So we previously broke through to this region, which also happens to coincide with the Fibonacci of this bullish trend-based fib extension level of the 128,458 region. So we bounced up to that region, got rejected on that one, and started to come down. We are seeing that on the daily time frame be a rejection point We'll put that on when we get to Momentum Master, but we showed you at the beginning that rejection of the adaptive coming across like so, and that also coincided with that one for a take profit region of a long taking their profit up there on the rejection that we've seen the previous 6 or 7 times we did it. So it was natural to assume we would start coming back at that point because there's a lot of resistance at this level, and we started to see that occur. Alright, so the Fibonacci, well, let's go into what is this trend-based Fibonacci tool. Well, you have 3 clicks that are required. This impulse to the upside, this retrace to the downside will give you these regions, which we have yet to get into this completely. Let's just turn the settings, extend this to the right. So we have yet to get into this bubble exactly, and then we started to get a more minutia, so we removed this box into here with other trend-based fib extension levels. So this daily one has been holding true in terms of how we broke through that, and we were seeing the one rejection here. So we started to project some more, and we used some trend-based fib extension levels from here, from this impulse to the upside and downside here. We can try to do a new one. Let's just do it fresh for you, shall we? Let's just remove some of this. Let's remove some of that. Let's remove some of this. Okay, we're going to remove it all fresh and clean and do some fib work. Alright. Alright, so what can we do here? So we're going to move to this impulse and retrace idea here on the halfway point. So we're going to take this trend-based fib extension level and basically start from where we stopped that consolidation here all the way up to the top here and down to the bottom there. So if you maintain the 27639 region, that could be a bullish path up into these regions for a bullish narrative, with a possible rejection somewhere in these regions here at 29628-ish, based on the daily time frame of this impulse and retrace after you saw that rejection of the 618 for a day or two. So this, after this, you decided to go higher for a few days and then back down. So this consolidation slash impulse retrace idea has that narrative locked and loaded in the chamber for how you would continue higher if you can maintain this level here at 27639. Okay, so if we look at the lower time frame, you can also do a bearish projection because it's good to put out both sides of the equation so you don't get locked into one way of thinking. Where can we start that? We can start that from that top to that retrace there. So we had this before, I believe. If you can't stay above the 28308 region, then this is a bearish projection idea for going down into these nether regions. And the liquidity pools do coincide here with the 0.65706 region here for that little liquidity grab before we go up higher. But ideally, if you were to go into the bearish mode, these would be your regions to look at on a longer time frame. And so that's what you do. You do the impulse and the retrace, and contained within that math is a story, a narrative that could be construed if it starts to break down at the 236 level. So the 236 is where it begins to the upside, the 236 is where it begins to the downside. So we're in this consolidation holding pattern between these ranges until we break one of them, and then it starts to play out into this region or play up into this region. As we see it right now, we're still in this region to go into these ideas below. Let's go on to the 4 hour. And you can use the regular retracement tool for this on the 4 hour. That was previously where we were seeing that bounce off the 618 region here. And you could do the opposite if you pull it from here to the downside. And we were getting a bounce off the 786 region here, break down off of that. So that's what we had previously in terms of capturing the price in these nice little Fibonacci levels. 618 to 618. You could have been scalping this if you were so inclined. I was of the mind to go down below, so I did not take profits, unfortunately. Shame on me. So that will be noted if we can get out of this down below into this region. So let's go on to the 1 hour time frame. All right, so let's go reload this one last time, see who they gobbled up when they started to bounce off that. So when they bounce off people, you can look at a free indicator called v3.aggr.trade. I repeat, v3.aggr.trade, and it will show you the liquidation levels, liquidation event rather, for 18 or 19 different exchanges. This may load. Sorry, it's gonna lag my system, so I'm gonna just turn that off. But yeah, you can look at that at your leisure. Basically, it's gonna show when people get liquidated, and you can see, like, for example, when this pool got repossessed just now, as we were talking about, they didn't quite come back for this 120 million just yet. Looks like they will, though. They might grab this 40 million first and then come back down, although it's very likely, because they're nearby, that they continue back down to this guy, and this is just an inducement of the long pools like they're doing here to kind of bring some juiciness, thickness to the broth below. So they might be coming back for this guy right now in the interim. And this is just a little bounce. So what they do is they repossess some of the money here, this 50 million that they repossessed, plus this guy 14 million. This $60 million that they repossessed here, they bounced using it. They bought Bitcoin using their money after liquidating them, and bounced to the upside, creating a little trap which brought more liquidity into the charts, which they can sell that Bitcoin off to go get this guy, and the cycle repeats itself. So these kind of liquidations start to create those bounces, and then they sell them off after they get more inducing below. So it's kind of this weird release of liquidity here, and then when they repossess their money, they can sell their position that they used to buy to liquidate them, and then they can sell it back down, and it creates this cycle of inducement of liquidity. So it's all a psychological sentiment which everyone falls into, which is a fear, greed, and ignorance chart, where we're basically looking at human sentiment here with the charts. It's not just numbers and math. There's people behind these transactions, algorithms, and it causes people to feel euphoric and fear and greed, and these things you're reading into, and to see what people would be drawing these flags, for example, that would induce them into a euphoric idea, which ends up playing against them. And that's where you start to get into smart money concepts beyond the retail realm. So it's not as simple as drawing flags and taking money out of the market. In a bull market that might work, but the market has evolved, traders have evolved, and you have to evolve to stay with the times, I believe. So you have to always keep in fresh with new ideas, don't get stagnant, and yeah, keep that beginner's mentality and trying to learn new things. So let's
accessing data.
Not again. Here we go. What's happening here? Hello? Are you guys seeing this? What?
All systems operational.
Hello? Hello? Time? Space? Distance and separation? Are but mere illusions? Projections cast out of the zero-point energy in the seventh dimension? Collapse through the quantum probabilistic foam in a spin-up or spin-down electron pair in the fifth dimension? And those electrons traverse back and forth through the fourth dimension as positrons? And only one electron created all of this? So that means nothing beyond you exists separately, and everything is a manifestation, a vibration, holographic probabilities, realizing itself on a continuum of self-driven momentum. I see. Let's take this into the charts, and there we go. We can see the self-driven momentum. I see. So we were getting 5 time frames oversold here, and I should have cashed out my short and considered going long off of Momentum Master. I should have followed my own indicator, momentummaster.info, for more information. What is that thing that I ignored on my live stream yesterday because I wanted a lower level? Let's go see to the features here. Ultimate. I see. You click on Ultimate and you can see that for yourself. Yeah, when you get those 5s and 6s, you do tend to reverse. Why didn't I follow my own advice? What is this stochastic array? A never before seen formula which simultaneously monitors more than 7 time frames of information, considering over 32 different indicator values? Wow, that's more than a human brain can handle. No wonder I wasn't really paying attention to it. Damn you, Daniel, you should pay more attention to this because it bangs up. And wait, we're getting diamonds here with the crossover of the baseline, which we put out on the hourly earlier today. And we're starting to see a kind of consolidation on the cloud. However, the baseline seemed to be coming above the price, and it looks like you have a cumulative time frame volume exodus here. This is a cumulative volume time frame delta formula, never before seen, but not advertised on here because it's kind of new. But it shows you when positions are being established to go up, and if they hold it, that it's kind of a hidden bullish divergence to the upside. So here we're seeing this bearish scenario play out of offloading of volume. We're at the top of the Keltner channel here on the hourly as well. If we can maintain this ATR on at 28.42, that means we could continue to the upside. This would also fall in line most likely with the retrace levels for the 618 golden pocket region. So even if you don't know your fibs so well and where to draw them, these kind of weighted moving averages and ATR levels should hold true in the math, just as we held true in the ATR here before we shot to the upside. If you had taken that long idea, I think Rainier put that out while I was sleeping, so shout out to Rainier. You could have taken this to the upside as well. So that's interesting. Let's go ahead and take a look at the higher time frame, shall we? So this was the rejection off of the adaptive, which we have been seeing consistently at this adaptive moving average. What is the adaptive moving average? Let's go into that. Adaptive moving average, a sensitive yet stable moving average which factors out noise and displays an accurate place where price will experience resistance or return for support. Think of this as a second line of defense or hurdle to overcome. Crossing this implies a trend reversal. So we have yet to cross that on the daily time frame, so that's noteworthy. Once we cross this and hold it on the daily time frame, then you can start to think about these regions being more than just a pipe dream. So first things first, we got to get and hold above this for a bullish scenario to ensue. Alright, so that is the adaptive moving average. So let's go ahead and look at You're starting to see the daily time frame attempt to play out here. It very well could by the end of this candle close in 9.5 hours. You are getting the Williams start to come down here. It doesn't necessarily need to play out like it did here, but it does happen where it does something like this too occasionally. So you go back to those alarms, you can have it open up and curve up a little bit before coming down, but the alarms are back testable levels where to take note of a potential suppression on that daily time frame stochastic. And that's kind of what you were seeing when this was trying to play out for the last couple weeks. You're seeing this have trouble taking off because the Williams is overbought. What is the Williams? It's down here in red and white and turns red when it's overbought. And you're seeing the average of it here beneath the price, or beneath the oscillator of the stochastic RSI. So you still have the MACD with the lines open. They have yet to cross on the daily time frame. This is a leading MACD. Once you start to see this purple line turn blue and start to want to cross here, then you could start to see that injection on the daily shoot up in a very aggressive manner. As of this moment, the momentum of the Williams could be coming to curve this down a little bit alongside the weekly, which is extremely overbought. Let's go ahead and take a look at the 22. Shout out to everyone here. What does this button do? Afternoon. What's up? What's up, party people? So the 22 hour is getting, you got that continue strong, or it could fizzle out. The 22 does fizzle out around this region as it did here at 75. So it doesn't always have to go all the way up, necessarily speaking, but something to note. One thing that I did see that was why we were fizzling out earlier was the 12 hour and the 6 hour. So the 12 hour still has, we were noticing that the 12 hour cloud was thin. We managed to stay above it and shoot up. Do we come back to retest that cloud in some manner? I have no idea. The 12 hour is still has momentum to the upside, potentially speaking, to stave off a dump of some kind. The 6 hour time frame has been overbought since the last candle and starting to curve down and taper just a little bit. This tapering could have another shoot up. Doesn't always mean that it reverses from this point, but you are getting overbought on the 6 hour and the 4 hour as well. 4 hours starting to come down, but could be getting ready for a double top scenario. Always be ready for anything at any given moment. Let's look at the other things on this time frame. So we got the cloud. We previously came back to the cloud. We haven't yet. We bounced off this weighted moving average, this baseline rather, and we could come back to the cloud to kiss it for confirmation, which would put us at 28.98 for that on that time frame. Okay, so we could come back to this cloud on the 4 hour to reset some of its stochastic goodness, just in a manner like so. Whoops. Like that. This is why I like channels, because you can take the tops of the wicks and the bottoms and then see where it would realistically fall and trade as it goes between to that region. I prefer that to the pennants, which gets you into the false idea of this, for example. If you did something like that, then you would be sorely mistaken if it came for your stop down below. This is one of those trading patterns that is very catching a falling knife of sorts. So you really want to get that fib level intact properly. So if you were going to go long, you would wait for it to hit that level, the 618. If you are in the long mindset and not waiting for lows to get hit or just assessing the situation, this would be where you think about it. Anyway, so let's go ahead and take a look. Looks like it's getting some buyback here to 28.275. Let's see what that means, shall we? All right, so in the last 5 minutes, we were seeing the stab up. What was the juicy target that they're going up to grab? Let's go in here, zoom up and see. Somebody over leveraged most likely at 28.333 $40 million up there. Did they grab it? Not quite. So let's turn on the liquidation levels on this. So they previously came back into some of the 100xers here, bounced off their liquidity, and they're going back for some of the shorts that got greedy up here that are opening up here, and still seeing more if we go to the 5-minute time frame. Hourly. So they did eat some of these guys, which left less open here, so they could be coming back to get this, but I'm still sold on what High Block has to say, which is these guys here personally. If we go to 5-minute is getting overbought. If we get this candle closing below this level, if it gets sold off slightly, then you would have bearish divergence. You previously had bearish divergence on the money flows start to play out to dip down here. And now the RSI is getting into that realm if it cannot get above this region. So watching to see how that closes in a minute. Let's go to the S&P, shall we? So London is closing its time. Normally this is when London closes out their position, so you see a bounce at this juncture. So recovering some of this gap from the S&P drop here would make sense that it comes back to recover some of this gap, and it normally recovers at least 50% of the gap before deciding if it wants to go lower or not, based off of the 5-minute, the 15, you have a 15 potential hourly play to the upside that might create a double bottom at some point. If it was going to go higher, you would have something like that ensue, where it tries to create a double bottom at some point after recovering some of this. If it were going to go higher, you would look for that on a Monday. Monday looks like they ran for the stops of the longs here from Friday, and they're recovering some of the shorts now, cashing out some shorts to go lower into this fair value gap here. I don't know. For now, we'll leave it there. Let's go to the dollar. Dollar is rising, suggesting pullbacks for the stocks. You are getting overbought on 6 time frames for the dollar. Pulling back into the golden pocket region of the 618 as well. If you could reclaim the 618 and get into this golden pocket region, then you're out of this red zone on the fib levels. Let's go ahead and turn this to just golden pocket now that we're in the golden pocket. But we had previously retraced into an 886 level, and we're starting to shoot back up to the 618 of this retrace region. So we had a really deep retrace basically on the dollar, and now we're back into this kind of pocket range, and you could get a rejection off the 618, or you can get a reclaiming within that pocket of the 0.5 618. So this is an extreme discount price that people are establishing a position here, which also recovers some of this gap over here. So you kind of recovered some of this gap and then bounced out off the fib level. Fibs are quite powerful tools to use in your arsenal. I hope you consider using them more if you don't already. So yeah, we're overbought on 6 time frames here. The 4 hour still has a little bit more momentum on the dollar. Let's see how much that could play out here. You have about 2 hours and 17 minutes for that to play out. Whether that closes in a bearish state or not, you are getting to that adaptive moving average. If you can't reclaim these 2 lines, expect some sort of consolidation around this region, possibly reclaiming that 618 while this adaptive curves. So it might be something off the adaptive. For the dollar, got a shoulder, head and shoulder potentially happening for the dollar, which would which would imply a week of retrace perhaps. And then this false move Monday upside could be a false narrative for that upside play. Let's go back to BTC and see how that juxtaposes. We are seeing this buyback kind of ignoring what the dollar is doing, which is interesting to note. So you're getting this 236 once again is for the bearish projection here. This 28308 region has been interesting to watch us meander around that. If we cannot get above that idea, then the bearish scenario is there and the bullish scenario is down below here at 27639 to bounce off of as we did before. So ideally, as you go up, you want to look for short positions, and as you go down, you want to look for long positions. Not financial advice, of course, but you buy at a discount and sell at a premium. So you don't want to buy things as they go up, you want to sell them as they go up. So that's just good economics. But what is going on here with these wicks on these 12-hour candles, quite interesting to note. That 12-hour momentum might be playing out here. The cloud that interested me the most the other day was the 8-hour here. So the 8-hour was going up, yet we were kind of beneath it. I was kind of shocked to see that strangeness. Even though we were going sideways, it kind of traversed up here. I was wondering what that was about. I don't normally trade the 8-hour, but we're seeing this kind of shift here too, which doesn't really make sense to me, but showing that the volume is leaving here in a curving manner on the 8-hour, and you're getting overbought on the 8-hour time frame. So if this was giving us the idea of going up, is this starting to give us the idea of it coming back? I don't know. 6-hour time frame closes in 3 hours. Starting to see some aggressive buying back here on the 1 minute. Let's just go see what's going on here. So as we start to go up, you start to see more 100x starting to open here on longs. It looks like the shorts are also opening in the same manner. When you see less shorts and more longs open, as you see more dots here, for example, then it starts to imply coming back to eat some of this. So are they doing this move to bring in more liquidity while at the same time knocking out the 100x here? I don't normally look at this on the 1 minute, I look at it on the 5. What is this indicator I'm looking at? This is liquidation levels by ML application. You can set your threshold to 0.1 for each 100k trader. and you can kind of see where the bubbles are and in what amounts if you ask to show statistics. So is there like a 20? There's a 2.4 and a 1.87 million guy up here in shorts that they're currently coming for by the looks of it. When they close their trade, these dots disappear, or if they come up and get them, then they disappear. So you can see by what amount and where they opened it. So this dot, for example, opened up $200,000 here and is currently in a loss as they come up to that liquidation level here. So if they come up to this line here, they liquidate this 200K character here. So you start to see how these traders enter as we're dropping, they're opening up shorts. Here's a 700K trade that they could come back and get $700,000 as this guy opened it down at the bottom. Like, you don't generally want to open shorts down here as we're falling. You want to open them as we're getting to the top point. So they trapped this guy here, and is that who they're coming to release for 700K? Could be. They previously released these guys. Their dollar amounts no longer show because it would take up cash. So they've been gone and liquidated. If you were watching that b3.aggr.trade, you'd be seeing them liquidate, and it spawns divergence many times. So you'd see like divergence form on some time frame off their liquidity, and that's essentially what divergence is the repossession of the money and buying it back off of their dead carcass. Alright, so I'm going to delete this trend line. It's throwing me off. So yeah, so you got this 618 that we've been playing with once, twice. Is this the third time? There's this thing called the power of threes. So you try to look for like 3 hits to the high before you reverse and 3 hits to the low before you reverse. So ideally you don't enter a short up here. You'd wait for the 3rd hit before you think about that idea. Alright, so what is it that they're aiming at? Shall we see? How y'all doing out there? Rainman Crypto in the house. So we are at the 28,300 region. We passed that now. Looks like they're aiming to get this stack of shorts that entered here. So there's different ways to skin a cat. You can use Rainier's into the Coinalyze, like open interest, cumulative volume delta, divergence thing, but this is kind of divergence you can see here because these dots are in more frequency than these longs, and they open them as we went down. So as they come up, these guys are underwater, so this shows them to be the target at that point. But generally you want to see where these 100x start to stack, and you see who's underwater at what point, and they start to shift the narrative to grab some liquidity. And here they just released, did they release him yet? Not quite. They might have released some of it because you get close to that liquidation and then it gives them that message to add more margin or whatever. So this is what you could be using for free on your charts, this liquidation levels if you don't have high block. Once again, I recommend looking beneath the 15-minute and lower. Not going, if you go to higher pools, it starts to get a little bit sparse in terms of what it's showing you, so it's harder to read in my opinion. But seeing this, we previously came back into this pool because we didn't really have that many shorts open here. So this was, I was putting out something in the Discord such as, where was it? Here. I was saying that we could come back into this because we have more down here stacked up, and we did. So even just off short scalps, you could be looking at it in that regard. So the 15 minute, how does this 15 minute play out? You are getting the money flow beneath the RSI here. And the hourly is also low again. One thing I didn't point out, which I should have, which is this reset of the hourly time frame and the kiss off the cloud. We are getting a reset of the hourly time frame here. So you could see the bang up to the 29.4. Now there is no guarantees of downside or upside. So this could be occurring in the sense that you are getting this kind of kiss off the cloud. It's pretty thick, implying that this could keep going. This cross down event seems to have been staved off in some manner. So are you going to get that push up on the hourly here and see an hourly scalp to the upside? That is the question. We got 8 minutes for the hourly candle close to give us some stochastic love. We talked yesterday about how the stochastic updates this information as it closes, so we'll give you that candle close update and then bid you adieu at that point. The 4 hour closes in 1 hour and 6 minutes, so you can see how this updates as well. We're seeing that double top kind of meandering up scenario similar to here possibly occur. False move Monday in effect. Let's go back to the S&P real quick while we wait. So this is Monday. Are you going to see a recovery of this gap? You didn't get a full recovery just yet. You're going to see that come down. Previously you had the nukes that started to play out as the baselines crossed down. This is why these baselines are leading. They kind of give you that idea before it starts to occur. So we're starting to see that cross up event if this closes in 35 minutes with this cross up. Is that a cross up? No, this was a cross up, I think, and this is a cross down. It's just the candle's gapped down, so it's appearing here above the candle. So you could see the suppression of the S&P too. I'm still holding true to my ideas based off of liquidity and 6 hour, 12 hour momentum, but anything's a possibility at this point. Let's take a look. So they're coming back into these little noodles up here that are just within the induced range of dropping here, these small little pools of 17 million, 15 million, 22 million, 14 million. These guys, they came and got this one previously, 15 million, and this 40 million character, they wicked off and let him live for just a split second, and maybe hoping they add more margin or something, and then they're going to come back and get this guy. So the 28,333 region seems to be this 40 million guy that they're coming back to, and then it starts to thin out just a little bit. I'd be surprised if they let these 100x remain though. It's a 100x position, so 168 million in 100x is a very juicy target to come back to, and that we've seen it happen multiple times here on the live. So I'd be watching out for these 2785, 2804, and 2814 characters here in terms of liquidity. Why did they leave that guy intact here? I have no idea. They do some weird stuff to try to get people to add more margin, I guess, but they let them, they toy with them. They come back and then they'll come back to this guy, perhaps. So let's go back to the BTC, get ready for that close, and I'll take some last questions and then we'll be out. smooth and sweet. Once again, if you were trying to long, you would try to long down in the bottom. I was trying to get a discount long down here because I was expecting the stops on the longs to at least get hit a little bit. This is why it has me doubting the long play in general, because there's a lot of 100x down here as we ascertain. So why would you leave the 100x untouched to continue to 29.4? It just doesn't make economic sense. It would make sense that a false move Monday, they induce more longs to knock them out so they can't be paid later. That's just my opinion, but based off of what I've seen of the games that we play with the stops where they go up and they come down and they do it with a huge fury to knock out as many people as possible. So, yeah, while we wait for that to close, let's see what you guys are up to. Dead carcass, fatality. So what you guys up to? Hopefully doing well in your neck of the woods. So we're essentially just going sideways. How do you see that? Well, you can use like a regression trend. It's over here in your trend line area. You can do 2 clicks to get that. It will give you that nice little channel for it. You can change the colors if you want, and then you use a parallel channel to kind of copy that angle or whatever, if that's what you like to do. And you can capture things in a nice little channel. So will you see this trade within this channel? Like, could happen. If it breaks out, it breaks out. But the hourly reset was noteworthy, to say the least. A noteworthy reset of the hourly without giving back much of the price action. Could false move Monday just be that they trade normally and that normally they don't, and that's the false move, is that they have the continuation normal as an easy play, and they give an easy continuation as their false move, and it's not overly complicated today. The liquidity suggests otherwise with these guys here, but we will see. We got about 1 more minute to see how this updates, so we'll just show you as it updates. So we have this at 21, right? So we're gonna see this close in 22 seconds, and you'll see how the stochastic gets updated based off of the previous candles and stuff. It's quite fascinating. You can see like, okay, that gives you about 20 points of data, I see. And it just feeds your subconscious based off of that look back of all those other candles of the reset stochastic here, these 14 hours. So we went up to 37 from 7-ish. So we got about 30 points up here. And this curvature started to trigger some algorithms which might bang to the upside a little bit here and get some of this liquidity out of the game. Interesting to note, nonetheless, we have 3 billion in long liquidity down below. This is a 1 minute time frame. We do need to think of the bigger picture. Are we going to see this 29.4 without a hit to the long stops? That is a good question. I need to consider as it goes higher if it goes to a region I'm uncomfortable with. So I was hoping it would come back into these regions and below to fake out some of the longs first. We will see. We'll trust the TA and trust the indicators that are telling me that this crossover event has yet to play out completely. And if we look at the 4-hour time frame, we do have that cloud kiss idea in mind, coming back to that. And the 6-hour, let's look at the 6-hour one last time. 6-hour cloud also coincides with that, as well as a baseline. So you could come back to that too. You're starting to curve on it. The 6-hour tells you your legs on the 4-hour are spent, and the 12-hour is kind of a subtle background radiation for the upside momentum of playing out. So you could come down here and see another 12-hour candle push you up. So the 12-hour does take a long time to kind of do its thing. It's not an immediate play necessarily. So we got that, and then the 22 hours still has potential steam in the tank, which closes in 7 hours alongside the daily close. So could you see that hold and push us higher? If we retrace back into this region, we'll look for it and let you know. All right, ladies and gentlemen, I value your time and I value your consistency to come in each and every day. So I will bid you adieu. What does it say? Ring when you like to gay. So let's just boom. Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Once again, thank you for doing your part, for coming on in each and every day, and we will catch you on the flip. So I will catch you later, everyone. We'll keep you posted in the Rainier's Discord. So catch you next time. Peace.